Is this bull market boring you? Good, because this might actually be the slowest bull market we've ever seen. But what if it turns out to also be the longest, with a historical run of insane catalysts while the world is bracing for a global recession and a big crash yet to come? The data is all saying the exact opposite. What do you trust? The news or the data? Stocks just had their best May in 35 years. US GDP is heading for an insane Q2 like pump. It's nuts. Bitcoin tightly following the global money supply. ETH's even doing shit. It's crazy. Cats are getting married now. It's nuts. Both are quietly moving higher. So what if the real risk right now isn't another crisis, but actually sitting on the sidelines while the bull market continues for much longer than anyone actually expects? Take a look at this tweet here from Ryan Dietrich, the chief market strategist at the Carson Group. He said, just a reminder that this bull market is less than half the length of the average bull market since World War II. And with Bitcoin and crypto aligning much more closely to stocks through ETFs and treasury companies, this is worth paying attention to. Let all that sink in. Now, according to Carson Group data, stock market bull runs typically last around 67 months on average, with a median of around 60 months. That's about 5 years of upside, and we're halfway through. This current bull market started in early 2023. Even while interest rates were still rising, recession doomers were shouting from the rooftops, Armageddon's coming any moment. 2.5 years later, still no recession. US economy still chugging along just fine. Markets are fine. We're not even halfway through an average bull market length. If the cycle sticks to the historical playbook, and that's of course a big if, who knows what the hell can happen, but still, we could see a broader market rally continuing right through 2025, right through 2026, maybe even into 2027. That would be the average age of a bull run. And if crypto follows along with stocks this time and doesn't just go off on its own crap show, it's big. Now add this to the mix. The Atlanta Fed has increased its projections for US GDP growth in Q2 to 4.6%. 4.6% is insane, man, which would be the second strongest quarter since 2022. The S&P 500 just scored the best May in 35 years, up 6.2%. Historically, when May gives investors the gift of gains over 5%, June tends to remain strong. The following 12 months have also always been green, averaging nearly 20% gains since 1985. Sure, this time will be different, but you're betting against the trend. Meanwhile, Bitcoin is quietly following the money supply, pushing higher. Everyone's here waiting for the crash, for the bond market to break, which there's some worrying stuff going on in the bond market. There's always worrying shit going on everywhere. Bull markets climb the wall of worry. Everyone's waiting for a credit event. But recession odds have dropped from 70 to 31% in the past month. So what if the doomers are all just early as usual? You know what they say, economists call 10 out of every 2 recessions. What if this isn't the top, but instead we're simply in the middle of the bull run? Let's be honest. Is this the slowest crypto bull market we've seen? Yeah, kinda. Is it a bad thing? No, actually not. Oh, I know there's been no insane altcoin season. We've been getting kicked in the balls in half our altcoin bags. I understand. I'm holding those bags too. No daily god candles for Bitcoin, all that kind of stuff. Just a whole lot of we're so back, followed by holy shit, it's so over every few months. That emotional whiplash is throwing people off, grinding investors down, and exhausting people. Crypto investors aren't used to this kind of slow grind, but stock investors are, and we're following more and more of the stock market all the time, it seems. Here's the part most missed, though. Bitcoin's cycle is still right on track, and I've got evidence for that. But before we dive deeper into that, guys, if you're trading cryptocurrency markets, you need a reliable exchange to do that on. You need one with deep liquidity. You need one that's not going to ask you for all your personal information and not do your KYC. You need one that's available everywhere in the world. That exchange is BitUnix. Okay, that's where I'm doing most of my trading these days. Great exchange, lots of coins. They got all the big stuff. They got exotic altcoins, meme coins, all that kind of stuff, long rips, short dips. And right now they're doing some insane deals. You get $10 for starting your account. You get up to $2,000 in trading bonuses. The more you trade, the more bonuses you get. You get up to $400 in deposit bonuses. So it's really simple. You deposit $500, you get $100 back. You deposit $1,000, you get $200. You deposit $2,000, you get $400 effing dollars back, which is crazy. And for the month of June, BitUnix is going crazy. We are giving away $1,000 during every single live stream. So Monday, Tuesday, Wednesday, Thursday, Friday, we do a live stream. Every live stream, we're giving away $1,000 to new signups. That could be you. $500 to 2 people every weekday. Check it out. Link down below. Thank you very much. Let's talk about this. Look, this bull market so far has not been retail driven like previous cycles have. It's been institution led, which again makes me think we're more wedded to Wall Street's fate. That's why it feels different. Bitcoin spot ETFs just pulled in $5.77 billion in the month of May, their best month since November 2024, overtaking gold counterparts, by the way. Corporate treasuries are stacking insane amounts of Satoshis. We seem to not be able to go a day or two without getting a new company that's announcing $1 billion buy of Bitcoin. Hedge funds are rotating in. Institutions aren't just dipping their toes anymore, they're diving head first. The water's good. Larry Fink from BlackRock said the water's warm. We're getting in quietly, strategically, with billions to deploy. The money is coming in a way it's never come to this market ever before. So now we're getting something much stronger. Slow, steady, strategic growth. I'm here for it. The kind that can't be derailed from a single tweet from Elon Musk or an exchange FUD headline. As CryptoCon points out, this is the longest it's ever taken for alt season to show up. And yeah, that sucks. You're holding a lot of alt bags. I get it. But zoom out, Bitcoin's parabolic run historically doesn't even start until the price breaks above the Fibonacci Bollinger Band top line. That's going to happen. And when that does, ETH starts running. And now we have ETH treasury companies, XRP treasury companies, Solana treasury companies. All those are getting ETFs. It's going to be crazy, but it's not happening yet. Guess what? We've never seen a full cycle without blasting through this top level on the Fibonacci Bollinger lines, okay? Based on that data, the real fireworks don't even begin until Bitcoin breaks 128,000. That's when mania season begins, which could run for a much longer time than people think. So, you know what? F the diminishing returns, people. This isn't about smaller gains, it's about longer time frames. This isn't retail mania yet. It's Wall Street funneling money into their pockets. Wall Street wealth is being surgically deployed into crypto. And it's doing it in a way designed not to shock the price, to let the retail herd stay out so that they can be exit liquidity later. But that's not you. Now, this all begs the question. Maybe this isn't just a slow cycle. Maybe we've entered a whole new paradigm, a whole new era of longer bull markets and shorter, shallower bear markets, like the stock market has. Because the longer Bitcoin grinds up, the more legitimacy it gains, the more strategic capital it actually absorbs. It becomes a more mature asset. And the more it cements itself as a serious asset in the eyes of TradFi bros. You're not late. You're just involved in and kind of early to a different kind of bull market. One that may go for a lot longer than everybody expects if we follow more and more stocks. And if we're only halfway through the average bull market length, we got a long way to go. The pain trade isn't down, it's sideways for now. And maybe all you need is a bit more patience. Don't get it twisted. The crash will come. It always does. It's just a matter of when, not if. The problem is everyone's desperate to be the first to call it, risking turning themselves into the markets next, Robert Kiyosaki shouting crash, crash, crash in every tweet, only to finally be right by accident when it finally happens after 10 years. Maybe this cycle is going to be different. We're smack right now bang in the middle of the final, wildest, most speculative part of the 18-year real estate cycle, the notorious winner's curse. This is the phase that can either make or break investors. This same cycle has repeated time and time again for over 200 years in the Western world. But it is Bitcoin's first time riding the full wave. We'll see how it performs. Institutions have been waiting around, of course, for this moment for, well, an entire generation. They needed the regulatory green light to be able to enter into the crypto market. And the green light's not just on, it's flashing. It's like a big old fat casino on Vegas Strip, man. It's boom, 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 boom. Buy Bitcoin, buy Bitcoin. Trump opened up the door. He's waving everybody in. Buy the coins, guys. Because if anyone knows about real estate cycles, it's Trump. So it's no surprise that Wall Street's quietly positioning to jump into crypto before the final parabolic phase blows the roof off, whether it be in 2025 or we do actually get an extended cycle and it goes all the way in 2026, 2027, following along with stocks in a way that it's never done before. This slow grind is exactly what smart money wants, steady strategic accumulation. Your secret weapon here is patience. Instead of buying into the doom too early, focus on surviving the sideways chop and being ready when the real fireworks start, because they will, because they always do. And when that happens, make sure your exit plan is in place, because history tells us that the everything bubble, we could be in the AI.com bubble right now, which probably aligns with a 2027 market cycle peak. That'll be bad. Different story, but related to crypto, because when the stock bubble finally bursts at the average age of a bull market, which is, again, not this year, it's not 2026, it's 2027. If we really have an average length bull market for stocks in 2027, that correlates with insane AI blow-off insanity, huge greed in the stock markets, huge greed in the crypto markets, all these treasury companies, all the stuff lines up, and we have a cycle that is going to surprise people. And you know what? People keep, so 4-year cycle, Lark, it's got to be the 4-year cycle, right? Let's see. Remains to be proven right or wrong. But here's a thought for you. This cycle, what has happened this cycle? Everything that no one's expected. We got a new high before the Bitcoin halving. We got all these false moves, false breakouts, huge decorrelation of Bitcoin during the big stock dump where Bitcoin's held up surprisingly strong by comparison. I know it still went down, but in a normal situation where the S&P and the NASDAQ drop over 20%, Bitcoin would have gone down like 50% and it only went down 25%. That's interesting. Things are happening. And if you're paying attention to what's happening, you'll see that this is a maturing market, a market that is slowly but surely following along the heels of what happens in Wall Street. And if what happens in Wall Street is where we're going to increasingly correlate as more and more Wall Street money comes in, which is a likely scenario, then we might have a lot longer for this bull run than anyone's expecting. Thanks for watching.